It's impossible to know, where the bottom is. But I would say this: I don't believe we've seen the bottom yet, and I have a different view of it. I go back again to other asset classes that I've invested in for decades, and so in every cycle, what happens is various actors, companies, take on more and more aggressive positions using leverage to goose returns, which is age-old. It works. It definitely works. Now, what you're going to find in this situation is many crypto operators, particularly lending platforms, have never operated it with such volatility before. So they were in the slow growth from Bitcoin, almost a decade ago, from $800 all the way to $60,000. And all along the way, some of them became really aggressive in using leverage, which is the traditional hedge fund model. Now, what happens, and this happens in equities, it happens in bonds, it happens in real estate, it happens in crypto. Crypto's the Johnny-come-lately new asset class with a whole lot of newbies in it. You're going to see a whole series of these actors get crushed to zero over the next few months. In the contagion of leverage being caught offside with the lack of liquidity. Voyager is not that big a deal. It's kind of irrelevant in terms of, this is a diversified shareholder base. It's not FDIC insured in any way, so it's not putting any stress on the government systems in any way. All the shareholders should consider themselves educated, no different than when you go to Las Vegas, put it all on black, and it's red. Educates the business models that aren't going to work. So it's like taking a big spatula from the sky and scraping all the crap out of the market, and it's going to happen very, very quickly. So anything that was built on a business model that is not going to work or can't sustain volatility is going to be gone, and it's a good thing. It's a wonderful thing. It's going to leave the industry much stronger. Yes, we must mourn the investors that got wiped out to zero, but even they are better off in the sense that they've been educated. You own crypto without leverage, and you understand your counterparty risk. Don't worry, by the time all the litigation is over from all these bankruptcies, you'll know everything about everybody. Lawyers are really good at doing that, and there'll be tons of class action, if not just straight on litigation, to go after any assets they can get. And that is sort of, when a fish dies in the ocean, it goes to the bottom, and that protein is reprocessed by slugs. And I'm not saying lawyers are slugs. They have more than single cell proteins, but they know how to get the last drop of any value there, and they're going to get it. It's going to take 5 to 7 years, but all of this is good. So when I hold crypto, and I know it's very volatile, I have zero leverage in any of my positions, because I know tomorrow morning I could wake up down 38% in any token, any coin, any project. And really, that's exactly what's happened. So, but if you put on leverage, you learn the very, very important lesson. You go to zero. Well, let's talk about that specifically, because I think it's a great topic, and for several reasons. Reason number one is people think that crypto, the entire sector, is going to get regulated all at once. That's not going to happen. The most likely scenario, and this is a personal opinion, but one I've been working on in Washington, along with others, is that we would like to get policy on just stablecoins first, because stablecoins represent a very powerful and efficient payment system. And we think we can get bipartisan support between both parties supporting the American dollar as a default currency for a global payment system. It's not going to be the Chinese yuan, it's not going to be the Swiss franc, it's not going to be the euro, it's not going to be the British pound. And the reason it would fall and default to the US dollar would be that is the currency used to denominate most commodities. And so the challenge you have right now, and why there's so much pressure to solve this, is it's very inefficient to transfer US dollars over to Geneva, then put it into Swiss francs, and then buy Swiss Nestle stock or whatever it is you want to do over there. It's really slow, very inefficient, very costly, not transparent, and not easy to audit. This is very simple policy. What it looks as, it says, okay, for any stablecoin, an audit every 30 days. And any asset underlying, holding up the value of the coin or token, cannot have a duration of more than 12 months. Now, you've seen that policy before. It's called a money market fund, and you'll find it at Fidelity and Putnam and many other financial services entities that are FDIC insured. Circle, if it wished, that issues USDC, could become a bank. They could be FDIC insured if they wanted to, but they are sort of leading the pack with crypto in terms of payment systems under a stablecoin that has not broken a buck. So you've seen even Tether trades below $1. It's 0.999 right now. And so when you break a buck, you lose a lot of confidence. So what I'd like to see happen here is that we regulate stablecoins first because of their utilitarian value within the crypto universe, and that get done in this calendar year. And the reason that might happen is Toomey is retiring, and he is a driving force, as you know, on the Hill, and is really behind this momentum and this bill, and has lots of support from both sides of the aisle. So algorithm-based stablecoins, nah, I don't think we're going to do that again. I'd rather see something backed by US dollar or assets that are very liquid that can have duration of less than 12 months. So that makes sense to me. So at the end of the day, the bad ideas get, removed by the big spatula. And again, it's unfortunate for those investors that didn't think it through, but not all stable coins are alike, USDC being the leader currently. Now, having said that, if you go look at current yields across the spectrum of duration from 1 month to 12 months, it's only 50 basis points right now. So right now, USDC, while it hasn't broken $1, is not a great place to park cash because you can do 1.2% in commercial money market accounts in US dollars. So at any one time, you have to manage assets as you always had to. I think USDC, when things stabilize and there's more demand for it, will probably have rates 300 basis points higher than 1%, but you just don't know. Everybody's learning. That's my whole point. That was a long dissertation about what I think is going to happen in stable coins, but if you're going to be in a stable coin, it's only a personal opinion, USDC is the one that has not broken a buck recently. So that's where you need management and compliance and total transparency. And so those who have opened accounts with Circle itself, managed it under corporate accounts, understand exactly what you just disclosed. But also the company is constantly monitoring its margin requirements and exactly what it's got and what it's holding. And if you have an account with Circle, you're getting a constant stream of information answering exactly those types of questions because they have their brand to protect. They also have that dollar strike value to protect, and they have their corporate accounts and account holders to protect. And they want to do that. They want to emerge from this successful, even though it's been tested with volatility. We all have risk, but if I have to bet, I'll invest beside Fidelity and BlackRock, and that's exactly what I do. It's impossible to know, where the bottom is, but I would say this, I don't believe we've seen the bottom yet, and I have a different view of it. I go back again to other asset classes that I've invested in for decades. In every case, traditional bonds, traditional equities, real estate, alternative asset classes, bottoms are reached with an event, a panic event as I call it. And you can find it in every asset class. Back in the hedge fund days when they started gating, these large multi-billion-dollar hedge funds that gated, shut down their liquidity, caused panic, and you saw bottoms in equities as they were being liquidated. There's long-term was one of the classics in the last couple of decades. And it was a fund that was over-levered and blew up. We haven't seen that yet in crypto land. There's no big guy has gone to zero yet, and I think that's still to come. That would be very healthy for the market to have that happen. Voyager's too small, it doesn't matter. The rest of these guys were kind of irrelevant in terms of total market cap. Bitcoin and the crypto market itself has almost been cut in half in total market cap. And so you would think we're on our way to the bottom, but I like a big panic event. That's always been a great way to bottom. It's towel throwing, it's capitulation, it's massive volume, it's total panic in the streets, and always a great buying opportunity. I have no idea who's next. Could be tomorrow morning, could be a month from now, but it's coming to a theater near you. And it will definitely be a very good thing for this industry. It'll be a great thing because it'll take out all of the bad, broken business models investment. But the more interesting challenge that I solved recently with Wonderfy again, with BitBuy, was to actually open an account, transfer all of my projects, whether it was a Polygon or Helium or whatever. I mean, all this stuff to me, these are not coins, it's just software, that's all it is. And moved it into, and slowly I'm doing this, I'm not finished yet, into BitBuy, where I can get a statement each month that my auditor gets before I do, and my compliance department marks to market every day at 4 o'clock. And I find it so humorous that the whole compliance world still marks to market crypto at 4:01 p.m. as if that means anything. Because it's trading 24/7. But they mark to market it because they have this giant infrastructure that reports back up, is there over leveraged positions, is the position more than 5%, depending on the mandate that it's held in. But this is what Wonderfy is doing. It's working under the regulator, under an order, completely compliant, actually has a public auditor looking at it now, signing my statements. That's a big deal. I think crypto has a very bright future. I'll be bold enough to say in this very volatile market for crypto that within a decade it'll be the 12th sector of the S&P. And the reason is there's just too much productivity, too much transparency, really strong vehicles for solving financial services problems that exist today, like transferring capital, as I talked about earlier. It's just too good and too efficient. And so it'll remain. The key is we need to get some policy. I think it'll happen first with stable coins. And you asked the question about the stock market. It's no different than the crypto market. The stock market is still a little expensive if you believe we're having a recession, probably fairly valued if you think we're having a soft landing. The trouble is nobody knows. So you're going to see this fibrillation going back and forth until we've resolved that question and we know where the Fed stands in further rate hikes. But there are some great companies that have lost 20, 30, 40% of their value. And I have to admit, I'm nibbling in equities as well, just as I am in crypto. And so I can't call the bottom, but I don't use leverage. That's the secret sauce.